So we're taking a look, and it looks like it's about 3.1 billion. It went up a little bit, or a lot. So the 2.7 is now 3.1.
I'm not aware of that.
Yeah, it just came out.
Yeah, I haven't heard that from anybody at the Fed.
Yeah, it just came out.
Our notes had it about 3.1 as well.
3.1,
3.2.
This came from us?
Yes. I don't know who does that.
You're including the Martin renovation. You just added
our entire capital plan.
Yeah, you just added in a third building is what that is. That's a third building,
Well,
including
no,
the
but
Martin building.
it's a building that's being built.
No, it was built 5 years ago. We finished Martin 5 years ago.
It's part of the overall work.
But it's
So,
not new.
So we're going to take a look. We're going to see what's happening, and it's got a long way. Do you expect any more additional cost overruns?
Don't expect them. We're ready for them, but we have a little bit of a reserve that we may use, but no, we don't. We expect to be finished in 2027. We're well along, as you can see.
Like it's got a long way to go.
Yes, sir.
So,
President, are there things the chairman can say to you today that would make you back off some of the earlier criticism?
well, I'd love him to lower interest rates. But other than that, what can I tell you?
Welcome everybody to the Daily Recap Show, where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500, and US stocks were mixed on Thursday, with the S&P 500 notching its fourth record close in a row as tech earnings from Google pointed to AI as a key growth catalyst. And as a result, because Google confirmed a lot of the AI narrative, the mega caps rallied because they are the most exposed to AI. Nvidia was up 1.73%, AVGO up 1.77%, AMD up 2.19%, Google just shy of 1%, but after its earnings, it was up as much as 4%. Meta was kind of flat. Microsoft gained. Apple was slightly down. Amazon was up 1.73%, and then Tesla down a big 8.2% on the back of its earnings. So we saw the mega caps rally today. We saw the rest of the market with very mixed price action. There were winners, there were losers. Such goes the market, but the S&P 500 virtually flat today. Only 3 green sectors: XLE, XLK, XLC, so tech and energy. Rest of the market was, deep in the red. Gold also falling 0.61%. Selling was led by discretionary, consumer discretionary, materials, healthcare, staples. All in all, a very mixed day across the board. But if you were levered to technology, your portfolio was probably very green. What really took it on the chin today was small caps, value core and growth. Across the board, small caps really just taking a beating today. Mid cap growth and large cap growth were the best performers, and then everything else was mixed in between. And today's price action really stemmed off a couple of things. Firstly, we saw positive momentum in the tech space, largely because of an executive order that Donald Trump signed with regards to AI exports as well as data centers. Pretty much, Donald Trump is signing an order that's going to make it easier to sell AI products to United States allies. The executive order will also be pushing back against woke AI. And ultimately, what this executive order is going to do is fast track construction of data centers as well as energy facilities. Long story short, this entire bill is centered around the deregulation of AI to make the US the leader. And that is why we saw stuff like Nvidia, AVGO, and some of the AI names rally on the back of this, along with Google's earnings. And then on the trade news front, the US and EU are close to a 15% tariff deal. I think we're going to get the announcement on the weekend sometime very, very soon. The deal is going to mirror the Japanese deal very, very closely. The details coming in very, very soon. I think we're going to get them sometime this weekend. And then we also got some very positive economic data. Initial jobless claims came in much better than forecast, 217 versus 225K. And then we actually got some very positive manufacturing data. Now you can see here we beat in a big way on the services sector, missed on the manufacturing side, and then the composite, which is these two together, came in at 54.6 versus the 52.9 expectation. Very, very solid stuff when you're beating the expectation on the composite, obviously led by services, but ultimately this is the data that moved the market. Manufacturing really, really good along with initial jobless claims. New home sales did miss by a wide margin, 0.6 versus 10% growth, and then 627,000 versus 690 million. However, the manufacturing data was the most important piece of data that we actually got today. And then looking at some market movers, Google was up just shy of 1% after its earnings. And guys, it was actually a really, really solid report. The increased CapEx, be it on the top line, be it on the bottom line, revenue accelerating, the ROI on their CapEx is starting to pay off. And I do think we're going to go see all-time highs for Google near the 220 mark before the end of the year. I think this report confirmed that. And I have a full breakdown of Google's earnings right here on the second channel. Go ahead and follow me, FinFluential Media. We covered Google yesterday, D.R. Horton, Netflix, Evolution Gaming, ASML, JP Morgan. So you can go check out all of these earnings reports for these earnings season as well as Google's from yesterday. AVGO was up 1.72% because Google increased their CapEx budget. AVGO benefits from that in a very significant way, and that is why AVGO was up 1.72% along with the AI executive order from Donald Trump. Southwest Airlines reported their earnings yesterday, and this was absolutely brutal. It was down 11%. It missed on revenue, missed on EPS in a very big way, and actually lowered its full year pre-tax profit guidance to 600 to 800 million from 1.7 billion forecast. So it was a double miss and a lowering of guidance. Brutal price action. And I think this stock is going to go lower because the airlines trade at single-digit PEs. This stock now trades at a 32 times forward PE based on these estimates. So this stock is probably going to go, down another 10% or so. It's going to be very, very ugly price action. And then Nasdaq, ticker symbol NDAQ, was up 5% after it beat on the top line, beat on the bottom line, securing revenues of 1.3 billion for the quarter, a 12% year-over-year increase, with solutions revenue growing 10%. Operating income rose 16%, earnings per share grew 24%. They reiterated their full year guidance, a very solid report from NDAQ. And earnings season still looking really, really good, guys. And then for everything we saw today, it was 2,500 advances, 4,200 decliners. We saw net outflows in the Nasdaq and the New York Stock Exchange. The S&P 500 was flat, but market momentum, market breadth still continues to remain very solid. If you ask me, everything from the 5-day to the 200-day is still above the 50% mark. And until this changes, expect stocks to continue to move in one direction, and that is up and to the right. Now, the Nasdaq today was the real outperformer, gaining 0.25%. The IWM falling 1.38%. Very ugly price action in small caps, high beta, mid caps too, but small caps in general really, really taking it on the chin. Large caps holding in there. The RSP somewhere in between. Growth outperforming value, but a mixed day across the market in aggregate. The new day for the futures just opened, and you could see we are slightly green, although pretty much flat here. European stocks gained as well. Middle Eastern stocks fell, and so too did Chinese stocks. So a very mixed day globally across the board. Volatility did tick up ever so slightly. Spot volatility, front month VIX down 0.87%. So the market's seeing a little bit of near-term volatility versus next month volatility, and I think that has to do with maybe some of the earnings reports coming in next week and the week after that, as well as some of the trade deals. But once we get a lot of that certainty out the way, volatility should continue to do what it has been doing. Now, on the back of I think what was the good economic data, we actually saw yields rise. The 2-year, 10-year, and 30-year yield actually was up. And then we also saw the dollar gain, again, as it pertains to a stronger U.S. economy with that manufacturing data, with that initial jobless claims data. So that is why we actually saw, I think, yields and the dollar up today. And as a result, TLT was down, bonds fell. Bitcoin was kind of flat today, but it really blasted off its lows. At one point, Bitcoin was down 2%, really coming off those lows. Ethereum up in a very big way. Crypto is still probably the place to be. There's certainly risk on sentiment in this space. Gold was down 0.6%, silver also down 0.6%, and then crude was up 1%, and that is why we saw energy stocks. Now let's talk about the S&P 500. This is the weekly chart right here. And when you look at the weekly chart, there's just nothing that you can fault. The weekly chart looks really, really good. We've got higher highs, higher lows, currently trading at all-time highs, and it looks like we are going to go ahead and make a new all-time high this week. However, the week is not over. When we go ahead and look at the daily charts, this is the daily chart of the S&P 500, things look really, really good. The candle close up here is a little bit concerning. This is what we call a shooting star doji candle. However, because However, we still finished up ever so slightly here on the S&P 500, but there was definitely sellers that came in at the top. If we look at the one-day chart, you could see very, very noisy price action. There were bulls, there were bears, but ultimately, when we got to the top end of this range right here, it does look like the bears came in a very big way, sold the highs. But also, if you just look at it this way, bulls came in from the lows right here. And net, we just finished flat on the day. And this is the type of price action you're going to see, especially when we're near the call wall and when we're waiting for stuff like earnings, trade deals, as well as, the FOMC next week, a lot of market moving events next week. That being said, it's very clear that the path of least resistance is still to the right. And it does look like we have a lot of support. I mean, if the S&P 500 is to pull back, there is a huge congestion of volume right here that will support this market. So for all intents and purposes, guys, any pullbacks that we do get in this market in the S&P 500 are just opportunities to buy the dip, because 6,600 by the end of the year. That is my year-end target. I did not change my year-end target after we had the tariff tantrum right here. It was 6,600 at the start of the year, and it continues to remain to be 6,600. So any dips we do get, if we get a dip to, the 6,100 area, even the 6,000 area, we're looking to buy that dip, looking for markets to move higher. The same is true with the Nasdaq 100. We're just looking for opportunities to buy the dip and go from there. And same with the RTY. We're looking for opportunities to buy the dip. Although I do see, objectively, I do see outperformance coming from the Russell 2000. If we get a rate cut next week, expect small caps to absolutely rip to the upside. I don't think that's going to happen. I don't think we're going to get a rate cut. But if we do, small caps to outperform. Now, I think some great small cap names that you can add to your portfolio. Company like Semrush, I gave you guys this a name yesterday. I think if you buy anything, I think if you buy this company inside this range right here, great buy. And I do think we're probably going to go see, the $15 area very, very soon within the next year or so. Semrush is a great company. Another company, I guess you could call it a small cap. Some would say a mid cap is NBIS. Now, they report their earnings in just a couple of weeks, so there is that risk. However, I do think that if you get, anywhere in the mid 40 region for NBIS, potentially even like, the low 40s, this is a great buy. And I do think this is a $100 stock in the making. But let's actually go ahead and quickly talk about Bitcoin and just cryptocurrency as a whole. So Bitcoin, as you can see, we've had a very, very solid year so far for Bitcoin, and we're doing what Bitcoin normally does. We're just digesting a lot of price momentum at the top end. So we normally have rallies, digestion. However, one thing to note about this digestion period we're seeing right here, it's a very, very tight range. Often you don't really see this with Bitcoin, but we're seeing a very tight range compared to this range right here, which was very, very wide. This is a good thing. So essentially we're coiling up, looking to make the next move to the upside or the downside. I think we're going up. And that's because global M2 money supply is telling us that we do definitely have room to run to the upside here for Bitcoin, looking at a range close to the 140, maybe 150,000. You could see probably as low as the 135,000, but generally in this range, I do think we definitely do go higher because Bitcoin tracks M2 money supply very, very closely. Now, if we go ahead and actually just look at Ethereum, right? Ethereum really punching off those lows, actually closing green on the day, up 2.7%. Very, very strong move. You could see right here, things were looking green for Ethereum at the lows. However, it does look like bulls are coming in. Bulls bought the dip today, bought the dip yesterday, bought the dip the day before after this massive run up. And I do think we probably are going to go higher. Yesterday, I said it is now or never for the Ethereum bulls to go ahead and retake this key level that we're approaching. It's this 4,000 level right here. This is the weekly chart, right? We've used it as resistance on multiple occasions right here, right here, right here. What the Ethereum bulls need to do right now is absolutely push into this area, find support, consolidate, and then go from there. If they can do that, we can go higher. If they can't, we're probably going to go ahead and tackle, this 2,500 area again, where there's a lot of congestion right here. Either way, the Ethereum bulls need to act now or never, and that's actually what we saw. Again, you go to the daily chart, we saw a massive move off the lows. What we need to see is continuation into the zone, price discovery, and then a move up. If we can do that, Ethereum can go higher. If not, it's going to be a very, very ugly day, and then we'll probably go ahead and have price discovery in this level. So Ethereum bulls, it looks like they're waking up. Ethereum outperforming Bitcoin, and they need to keep pushing higher. Otherwise, this previous resistance zone will act as strong resistance. And diving into sentiment, guys, this is AA sentiment survey, and bullish sentiment has declined for 3 straight weeks. We also did see bearish sentiment decline last week. However, it's fairly even across the entire spectrum of bullish, neutral, or bearish, which does suggest investors are cautious, but not exactly panicked. This moderation in optimism could actually create room for upside if the upcoming data or earnings surprise to the upside. And that's actually what we've seen in the last couple of weeks. We've seen earnings and earnings revision move to the upside as analysts became slightly more pessimistic, and now they're rushing to revise their EPS and price targets higher. And we've actually seen this in Q2 more specifically. Look at where we were at the start of earnings season, 5.2%. Now earnings are materializing at about 7.5%. And if you actually exclude energy, you're looking at 9.4% earnings growth. So just remove energy and you got some very, very healthy earnings there, despite all of the drama we've seen in the market lately. Look at the revenue side, excluding energy, 5.5%, absolutely smashing estimates, margins double digits as well. And look at this right here, 84.6% of companies that have reported above analyst expectations, although only 117 companies have reported, but a lot of market cap has reported. So everything looking really, really solid from the earnings side. And again, if we continue to see upward surprises, sentiment can turn very, very quickly and the market can continue to rally. Now let's quickly talk about the macro. I just want to go over the main macro themes, just the broad economic indicators to give us an indication where we are right now. For Q2, the Fed's GDP now estimate is sitting at 2.5%, very, very healthy. The unemployment rate at 4.1%. This signals a tight labor market. PCE inflation, or just inflation in general, is at 2.3%. We did see a tick up from the prior print. However, inflation is still not a problem. And then looking at retail sales, essentially a barometer for the consumer, sitting at around the 3.94% level right here. Very, very strong if you ask me. Don't bet against the economy. Don't bet against the consumer. And all of these indicators are telling us that the economy is actually really, really good shape. Some indicators, excellent shape. But in general, the economy is telling us everything is good. And when the economy is good, stocks generally tend to do well and you can support elevated valuations. Now, guys, looking at data for the rest of the week, tomorrow we get durable goods. That's going to be the main data point right there. And that's pretty much it. We're looking for a negative 10.8%. So a big move right there. And then month over month up 0.1%. That is excluding transport. In terms of earnings, tomorrow on Friday with HCA Healthcare, PSX, and Charter Communications. That's it, nothing more. All of the big names are already behind us, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.